Alright, let's talk about MOWI. This is a defensive stock. This is a great stock, in my opinion, to park millions in. This is not a stock that will make you rich quickly, but it's a stock that will make income more predictable and be a more secure compounding instrument going forward. So since my goal is to grow money quickly, it's not something I will put money into now, but later in my 30s, this is a stock that I would definitely consider. So what you're seeing on screen now is the American listing. This company is listed at the Oslo Stock Exchange as well, and we have the over-the-counter market listing here in America. So the stock has gone up and down quite a bit. It was higher during the fantastic low interest rate work from home's time, and then when the interest rates became higher, this stock dipped just like a lot of other companies. We're not seeing any yield or price to earnings in the information box here, but indeed the yield is quite good, and that's what's making this company a great defensive, predictable investment. Let's talk a bit about the market here for it and some of the political trends. We're seeing quite a lot of seafood companies coming out of Norway. They have an index for it. And if we listen in on politicians, they talk about shifting away from the oil industry and building good foundation for other industries in Norway going forward into the future. And one of those industries mentioned by name is salmon harvesting. So having these farms out in the ocean, a big net basically that's submerged in water with tons of salmon swimming around, and you just dump a bunch of food down there. Some of those nutrients leak out into the ocean, but nonetheless they have a environmentally friendly grade here, CDP grade of A-, and they're able to secure green bonds somehow. Quite interesting, but I'm not here to comment on that. I'm here to comment on a great company with a nice yield as well. So by market cap here in 2020, MOWI was the largest one in the bunch. So very defensive, very predictable, very large already. We're seeing fluctuations based on the price of salmon. We often see press notifications regarding this and the stock exchange for salmon prices. And this also affects stock price and it affects earnings per share. If we take a look at some numbers here, this is in thousands of euros, these numbers. So when you're seeing this number here for the full year of 2021, this is 4.1 billion euros in earnings. Very nice, a very good number. And we can see that they've been able to grow this up until the full year of 2023. It was almost 5.5 billions. And profitability is nice as well. This company is not diluting shares. There's been just a slight dilution in recent times. But leading up to that, we can see that the total numbers of outstanding shares has been stagnant. And also looking at earnings per share, we can see that it's quite a lot up and down here for the years in terms of, this is in euros now, the number here. So 0.64 euros, 0.86 euros, and then we had a very nice year in 2022 of 1.51 euros in earnings per share. Let's talk a bit about the policy, what the company is doing with the money, because they can only make certain amounts of investments. They're already a large company. So they have a policy for cash and excess cash. So MOWI here has the ambition to create long-term value for shareholders through positive share price development and growing dividend in line with long-term earnings. Quarterly ordinary dividend shall under normal circumstances be at least 50% of underlying per share, so EPS, the one we just looked at. And then also excess capital will be paid out as extraordinary dividends, and we've seen quite a few of those. They are very nice when they come in indeed. And when deciding excess capital, the board of directors will take into consideration expected cash flow, capital expenditure plans, financing requirements, and appropriate financial flexibility. A bunch of corporate word salad. Further to this is long-term target level for net interest-bearing debt is determined, reviewed and updated on a regular basis, of course. We need to have less debt when it's more expensive, and when it's cheaper, it's reasonable to take on more debt. Shareholder returns are distributed primarily as cash dividends with the option of using share buybacks as a complementary supplement on an ad hoc basis. So indeed, if share prices are considered low by the board, well, then it makes sense to do share buybacks. And here we can see a list of the dividends for this company, indeed, both in American dollars and in Norwegian krona here. And as we can see, they're having quite a lot of dividends, a lot on a quarterly basis, and also extra dividend from time to time. This is something that's recent. If we look in the past, there were no dividends in 2008, and then there was not quarterly dividend here in the past. For example, for 2011, we just see one big dividend of 8 Norwegian kroner, nothing for 2012, and then once again in 2013. Now they're starting to build a track record here, and then for 2014, 2015, 2016, 17, the numbers keep coming, 19, continuing to pay out even here in 2020, even though this was a pandemic year, we had one payout. And then it started to be more quarterly again in 2021, 2022, and as you can see, the trend seems to be that they are building up a streak. It was not as regular in the past, and now the trend seems to be that dividends are getting more regular, and we have seen special dividends in the case for MOWI as well that have been quite nice for shareholders. So as a defensive investment, I really like MOWI. In my opinion, I think it's a good place to park a lot of cash once you have built up a bigger nest egg, once you're closer to retirement and you need more predictability, less volatility. Obviously, we've seen some volatility here in the past, but it's nowhere near the level on stocks that I've done analysis on in the past. And we can see that the price right now is quite attractive. In terms of the forward yield, it was 3% something when I did the math. And I think those are quite attractive numbers, especially considering the high potential for special dividend as well. So right now, with potential for dividend growth and potential for extra dividend, I think that this stock is very fairly priced. Also, considering the will from the politicians in Norway to make this an industry of the future, an industry that they're betting on, that means I don't think that there will be any regulation being processed and made that will be a lot of red tape for this company in terms of the business. I think that politicians have an interest in making it as easy as possible for MOWI to operate among with the other companies in the seafood index. So I think that we will not see major roadblocks being put up for no reason for this industry. And then I also think that the demand for salmon is not going anywhere. It's a very nice fish, people like sushi, people like to eat it. And I think that this demand will steadily increase over time as people start to make more money and the desire for consumption increases in the middle class and in the lower class. So definitely a very interesting defensive company. We can see that if we look at it, since it was listed here on the OTC exchange, it has only given a return of about 60%. And it can be argued that expected returns will be higher in the future as a result of this, but I don't think that this argument is valid in the case for MOWI, given the primary way of distributing wealth to shareholders, not only through the capital gains on the asset, the shares themselves, but also through this dividend and then continuing to pay out excess capital as extra dividend rather than reinvesting and expanding, growing the business. It's growing nicely nonetheless without heavy investment. We saw the revenue numbers indeed. So all in all, a very healthy, very nice, defensive company. That's my opinion on MOWI, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.